Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler Trading with your Friday Weekly Edge show. Today, we are going to take a look at what took place, quite an exciting week in the broader markets last week, and then beyond, look underneath the surface, see where that excellent outperformance and strength is so that you can capitalize on that, and then what drove the price action in the markets this week. And last up, viewer question of the week. And it's all about how you can capitalize on this newfound strength without chasing these stocks higher. So we'll get into all of that. First, let's go ahead and take a look at some of those headline news this week. Most impactful was the CPI data, the Consumer Price Index data that came out on Thursday for the month of October, and it showed that that core CPI, this is going to be the CPI number that excludes the very volatile energy and food prices, and it came out lower than expected, 6.3% as opposed to an expected 6.5%. Great news for the markets because from here, there is anticipation that the Federal Reserve may lighten up on their aggressive rate hike strategy. We'll get into that as we move forward. With that, on Thursday, we did see the largest rally day since that coming out of that 2020 bear market. Of impact and note is the fact that interest rates or bond yields dropped sharply. Hence, the markets were able to rally. And we'll see which area was impacted the most from that drop in yields. Also, later in the week, on Friday, consumer sentiment dropped as recession fears surfaced. We are still in that period generally where bad news for the economy can be good news for the broader markets, but also bearing in mind that the bond market was closed on Friday because of that Veterans Day holiday, so we didn't have that interest rate impact. We did, most importantly from my work on Thursday, experience what is called a follow-through day, which has been a characteristic of every market bottom going back over 100 years. Now, are we in a new bull market? A little too soon to tell, but I will walk you through what we did experience and what to be on the lookout for there as well. So let's take a look. Here we are with the daily chart of the S&P 500. A couple of characteristics I want to point out to you. First up is the fact that we closed the week above this key 50-day simple moving average. This is that Thursday rally, gap up, super nice volume here, and a nice continuation rally into Friday. In turn, again, that follow-through day is something that is a renowned characteristic. Bill O'Neill, founder of Investors Business Daily, has developed it after studying many market cycles. And quite simply, we did see an increase in the markets above 1.4% on volume higher than the prior day. And then also of note is the fact that this particular pullback did not undercut this prior low. So it is a secondary follow-through day, but certainly something that we will take as it is quite bullish. The outside momentum here, the RSI up above 50 and trending higher. Stochastic's a faster moving momentum indicator, also heading higher above that 50. So overall, we certainly have near-term momentum on our side. We will need to pay very close attention to how the markets behave here at this 200-day simple moving average. This is your next area of upside support. So I did mention that interest rates were a big driver as it relates to the rally. Let's take a look at the high growth NASDAQ composite, and we're looking at the NASDAQ. These bar lines here are the price action going back to the beginning of 2022. And what I did want to point out to you, we can see that the NASDAQ has suffered greatly, certainly the most in the way of underperforming year to date. And what I am overlaying on top of that is a line of the yield on that 10-year treasury. And quite simply, we can see that as interest rates rise, that growth-heavy NASDAQ declines. Quite simply, investors do not want to pay up for those great growth stocks because rising interest rates reduce the value of their future growth. So here we are looking at price action over the last 2 days. We can see interest rates declining. I'll show another chart of that going forward. But take a look. We can see this big gap up and continuation rally. The NASDAQ closing the the week up over 8%. From here, I do want to share with you a view of the 11 S&P 500 sectors, and I've added a relative strength indicator, sorted this list in descending order. It's a 2-month daily price chart view, and a couple of items that I do want to share with you, because this view, if you do it regularly, is going to be really helpful as far as pointing you toward where the strength is. It's going to be up in this upper quartile, and then also you want to be on the lookout for rotation, sectors that are moving from this lower quartile up here to the forefront. So let's start with rotation. Again, this is something that I do very regularly, so quite on top of it, and I did want to share this very pronounced move into technology. This is XLK, the ETF for tech names. We can see this advance. It was the top performer for the week, up about 10.5%, well above any of the broader market indices. Similar to the S&P, has broken above that 50-day with your momentum now in positive territory. So this is currently where your strength resides and where you want to be looking for candidates to then take part in this relative outperformance that is poised to continue. Also up here, you do want to look at some of these stronger areas. This is basic materials, XLB, nice breakup above that 200-day, pretty good volume on this upside, and I'll share with you pockets of strength here, and one of the reasons among several that we are seeing materials, these are going to be your commodity related stocks trending higher at this time. One other area that we can take a look at that had been up here in the forefront for the last 5 or 6 weeks, that is energy, and it's moving a little bit to the middle of the pack. However, it remains in an uptrend. Energy stocks were up only 2.5%. That compares to the S&P up over 6%. But we can see a nice rebound rally into Friday. And this is all about taking advantage of the move into commodity-related stocks, certainly oil, and then also the continued reports of excellent earnings from these underlying stocks. From here, let's go ahead and take a look at, again, even closer to the markets. And what I have here are many ETFs, actually 10 ETFs, sprinkled in with the broader market indices, the Dow among them. And again, strength to weakness. This is a great way to really get your arms around where, again, that relative outperformance is, which area is moving from this weaker area up to the stronger. And here we are. I talked about basic materials on the move. This is the ETF for gold stocks of 5.5% for the week, a nice downtrend reversal shaping up here. From here, let's take a look at one of the factors that help drive gold and other metal stocks higher, and that is a very steep decline in the US dollar. And this decline here, in turn, when we have a drop in the dollar, it is advantageous for these commodity related stocks, and it's also good for the broader markets. A rising dollar is not a good backdrop. Other areas to pay close attention to here are semiconductors. This is one of the very strong sub-industry groups within technology. Semiconductor stocks were up 15% for the week, and we did experience this downtrend reversal. For those of you that are subscribers to my MEM Edge report, you'll know that last Sunday we were on the lookout for that reversal to take shape, and it did in a very bullish way, and a number of stocks within that area are looking quite constructive. Another area, high growth, that rallied with that reduced interest rate environment, as well as some names having strong growth prospects. This is XRT, the retail S&P 500 retail ETF. Nice volume here. We're not quite up above that 200-day simple moving average, but we are seeing strength. Next week is a big week for retailers. We have Walmart, Target, Home Depot, among many retailers that are due to report. So we're going to keep an eye on this group as strength is beginning to bubble up. Let's take a look at that yield on the 10-year Treasury. And I talked about the impact in and on high growth stocks, and you can see this pretty significant decline. We closed the week at about 3.8%, so we're below that psychologically high 4% area. Another good backdrop for a continuation rally here in the broader markets. And then one other area here with technology. This is the tech software ETF. IGV is the ticker symbol, and you can see it has broken back above this 50-day simple moving average RSI, up above 50, trending higher, and then that nice MACD crossover signaling a reversal of this downtrend. So those two areas in tech are very, very strong, and there are select names within that I'll be covering in my MEM Edge report over the weekend that you can trial using the link below. From here, I did want to go ahead and talk about very briefly utilizing these inverse ETFs. This is SPXL. It is 3 times the bullish nature of the S&P 500. In other words, if the S&P is up, you will see this index trade higher by a 3 multiple, and we can see that it is in a nice uptrend. Of note is the fact that if the markets were to pull back, you are going to get that 3 times on the downside as well. But I would point out to you that the RSI is now trending above 50 and higher, and the MACD is just dipping into positive territory. If we go back to this July into September rally, we can anticipate a potential increased move in this S&P ETF that takes advantage of strength. And then for the NASDAQ, QLD is another leveraged ETF and very similar in that downtrend reversal that is taking shape. Now, I did mention to you the concept of these stocks. So many of them have double-digit and big moves in those beaten down growth areas. So from here, you will want to have a game plan so that you're not chasing these names. What I'm going to share with you is a stock that is not super growthy, but it does have chart characteristics that can be helpful. It's a company that reported earnings, Expeditors International, EXPD, and we can see this gap up that took place upon the release of their very strong earnings, and then a continuation rally. This is what we are going to be on the lookout for a number of these beaten down names if we have this nice continuation rally in the broader markets as well. So what I did is added a 5-day simple moving average. In some cases, this can be ideal as a pullback to that shorter term moving average can be an ideal buy point, but we can see that EXPD really took off and never pulled back, and that's something that we are seeing in certainly tech names as well. One of the characteristics you are going to want to see when that company first begins to take off is high volume. That's indicating accumulation characteristics. We continue to see high volume as the stock continues to trade higher. From here, I'm going to take us down into an intraday chart so that this is really what you are going to want to use to pinpoint your entry and potentially your exit point. Here's that gap up on earnings. The stock continued to trade higher. I'm going to mark this up. This is a 15-minute price chart. The 1 hour is going to be even more useful, but for those that are super short term in your trading, a 15-minute can be helpful because we did have a pullback of EXPD below these moving averages. Normally that's very negative. However, your RSI remained in positive territory, so you could stay with the stock through that pullback. This pullback here would easily be a shakeout because that RSI trended very briefly into negative territory, but if you're looking for a buy point from that pullback, it will be a move back above these moving averages. It's a 5 and 13 simple moving average. You want to marry that with a positive RSI, and then we can see that the MACD remains in positive territory, and off we go into a nice uptrend. From here, I'm going to share a 1 hour price chart, and this will move a little bit of that choppiness, remove that, and we can take a look at what to be on the lookout for with this chart view when you are examining and considering entering these names that are in very strong uptrends. So here we are with EXPD on that 1 hour. I do have a 13 and a 5-hour simple moving average, and then again those momentum indicators. Here's that gap up upon the release of earnings. You will be using that gap up upon the move into, for instance, semiconductors or software names, for instance, and you're going to want to see that move above these moving average coincide with a nice bullish move on that MACD. Black line up through the red enters into positive territory above zero. From here, EXPD can be held as long as the stock remains above this 5 and 13 hour simple moving average. And we are in a continuation rally phase here, but you will want to use that daily chart in conjunction with the intraday chart, because that can be very helpful as well in identifying a possible pullback. So on the daily chart, we are also in an overbought position, RSI above 70, but let's just take a quick look at the characteristics that would indicate that this near-term very strong uptrend has in fact reversed. First up here, and this is not a particularly strong rally, but certainly for educational purposes very helpful, your RSI turning into this negative area below 50 with a break below key support, and then that volume on the downside is above average, indicating distribution and the stock having more selling ahead. So that is a great way to capitalize on some of these stocks that are experiencing significant moves. And then when talking about trading into earnings, I talked about Home Depot, Walmart, a number of these companies, certainly Target. We're seeing a rally into their earnings with anticipation of good numbers that will see a continuation rally. However, fair warning, you do not always want to. Certainly, I don't trade going into earnings unless you have options that are protecting you, because, for instance, Disney did report this week, gap down, very weak numbers. We are seeing a bit of a rally recovery out of there, but not all news is good relating to these companies that are reporting their results. That's it for this week. Everyone have a fantastic weekend. I'll see you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.